maybe we can look at the independent branch. Remember we said we have three types of branches: dependent, independent, and the foreign. But the examiner only examined two: dependent branch and the independent branch. The foreign was removed. So in this branch, we only need to prepare the income statement, which is the P&L, and the balance sheet for this one. So you will write explanation and say, independent branch will be required to prepare independent branch will be required to prepare and present the income statement and present the income statement and present the income statement and the statement of financial position and the statement of financial position and the statement of financial position at the end of each economic period. At the end of each economic period. So have we written that?
Yes.
Okay, put a full stop and say, the financial statement of the independent branches, the financial statement of the independent branches will then be combined with those of head office, so as to present the financial statement of the combined business. The financial statement of the combined business. The financial statement of the combined business. So that is a statement explaining the accounts which we need to prepare for independent branch. So I hope kila mtu ameandika all the information. If kama kuna kitu naona ina miss, you said we correct that. So you will write the format of income statement. The format of income statement, which we have sales in brackets, external only, then we'll have a goods sent to branch, and this we don't have. So okay, you can say here this is head office, HO, this is branch, and then combine. So for the total will be this plus this. For goods sent to branch, we don't have for the branch, but even the combined, we don't have for the combined. And then you get the total. That one will give us our total sales. That one will give us the total sales. Now, after getting the total sales, we need cost of sales. Cost of sales. For cost of sales, we start with the opening stocks. Have it here. The same case with the combine. Purchases. Add purchases. Add purchases. So it can be either in branch or head office. Goods received. So goods received. So if the branch don't want to buy goods, they'll have to order it from the head office. So you'll have the good received from the head office. And also we don't have it in the combine options. Then we go to the, so that one, if you take this, summation of this will give us goods available for sales, goods available for sales, and then to less the closing stocks, less closing stock, but this closing stock, it should be in the bracket. It shows that it is a negative. The same case with the other two. Then to less expenses. For us to get, so after getting that, it will give us the gross profit. Should get the gross profit. After getting the gross profit, we do adjustment or less expenses. Less expenses, which expenses we are not, we have a lot of expenses, so we cannot exhaust the expenditure here. But the one which it might be there is either unrealized profit, which it is not common expense, is unrealized profit on closing stocks, unrealized profit on closing stocks. Apart from the common one, we have other common expenses. But then you will say other expenses, which you have not, you don't know. So if you less from that, you get your net income or the profit. You get your net income or the profit. And then at the end of it, we will do a transfer. At the end of it, we will do a transfer to the, remember, this is the branch. And who is the reporting entity? The reporting entity is the head office. The reporting entity is the head office. So whatever we got here as our net profit, we'll have to transfer to the head office. So you'll have to transfer to the head office. So you say, let's transfer Let's transfer from branch income, which is this one. So we will subtract this also on both sides, or it will affect the total, so that now we get now the normal profit here. So we will get a profit here. This one will be nil, but this one you will have this, and also you'll have for the combine, and also you'll have for the combine. So that is the format of income statement. That is the format of the income statement. So kindly write, ama umeshamaliza? So if you are done, check the group. There is a question I shared. Yes. Over 20, which is this 2014. Yeah, May 2014. So we have been told, I hope you have downloaded, you have checked that picture. So we have been told, yes, I don't know the name, but I think it is a Munish. Munish Enterprises commences a business on 1st April 2023. The head office or the head office of the fine is get the first paper. So he said the head office of the firm is Nairobi with a branch in Mombasa. The branch is managed by the salaried manager. Another information we've been told, Munish Enterprises acquires job lots of plastic toys and the package then according to the customer's order. The packaging is feature of the firm's marketing strategy, and the cost of 10% of the cost price of the toys. The toys they are thereafter sold at a profit of 12%. The selling price of the selling 12% of the selling price. Full stop. The packaged toys are sent to the Mombasa branch at the selling price less 6%. Less 6%. So that information alone will enable us to get the selling price and the buying price of these two companies. So we can't have to know what was the selling price. So we need to know selling price to the public, selling price to the public. We also need to know cost price, and we need to know selling price to the branch, So if you look at this question, is that we've been told that the packaging of sales is 12% of the selling price. So if let's say that the selling price to the public is at 100%, That is the selling price to the public is at 100%. This 100%, is inclusive of the profit margin. Is the inclusive of the profit margin of, tumepewa the profit margin ya ngapi?
%12.
Yeah, 12%. So what is the cost now? If we have the profit margin and we have the selling price, what will be our cost price? 100 minus the profit margin of 12%? 12%. So our cost price will be 88%. 88%. Now, what about selling to the branch? We've been told for the branch, hapo chini tumeambiwa packaged toys are sent to the Mombasa branch at a selling price less 6%. 6%, less 6%. So the selling price to the public is 100. But now, selling to the branch, we are selling it at 100%, but less 6%. I think maybe that is a discount or what here. So we will take 100 minus 6%. So the selling price to the branch will give us 100 minus 6, 94%. 94%. So this is our selling price to the branch. This is our selling price to the public. And this is the cost. The cost cut across either branch or the head office. So that, I think the first information was helping us to get this information also. Okay, so write that if you have not written it. So we continue. Not number one. So we have been given the income statement, not the balance, is not even to the balance sheet, but data. So we have some data of the assets, liabilities, expenses, and the income. Then additional information, number one, we have been told the packaged goods whose selling price to the public was 3809 was dispatched by the head office to the Mombasa branch on 28 March 2014 and were received on 1st April 2014. When are we closing these books of account? It is that 1st March 2014. When were we receiving these goods? On 5th of April. So in that case, hizo goods tutaitaje?
Goods on transit.
Yes, goods on transit. Yes, so goods in transit. They have not received that good in transit. So, and then, so, and you remember this is, we have been told who's selling price to the public. So you can see you have to relate. We'll be using the selling price to the public and also selling price to the branch. To the branch. To the branch. So that one we will like, so you need to know with that information alone, what is the cost price and the selling price to the public. We have been given, let's say, not one. This is not one. So we will have our working here. Okay, so not one. Selling price to the public is 30. Can we use all the zeros? How much we cut 3 zeros? Just we cut 3 zeros. So it will be 10.8 09. Now this one is the selling price to the public. Can we get the cost price of this? Yes. So you will say if 100%, which is the selling price, is equivalent to 30.809, what about 88%? 88%. What about 88%? Itakuwa ngapi? So our 88% will be 88 multiplied by 30.809. We divide by 100. So this will be our cost price. This will be our cost price. Can put 2 decimal place. This is our cost price. So remember, this is the selling price to the public. What about now selling price to the branch? Selling price to the branch itakuwa ngapi? Nani anaweza tusaidia the selling price to the branch? Selling price to the branch. This is the cost. This is the selling price to the public. So what about the selling price to the branch? Using these three. So unaangalia tu ni gani tunatumia. So selling price to the branch itakuwa ngapi?
28.96.
28.96. Umeipata aje?
Nimefanya venye tumefanya kwanza. If 100 is equals to 30.809, what about 94%?
If 100% is equivalent
to 30.809.
To 30.809. What about?
What about 94%?
What about 94%? Which is our selling price to the branch. So I will take 94 multiply by 30.809 divided by 100. Yeah. So this is our selling price at the branch. This is our selling price at the branch. So given now we have the selling price, and then we have the cost, and then we have the selling price. But at the end of it, you realize these goods have not been sold because we are receiving on 1st April 2024, 2020, not 2014, after we have already closed our books of account, which means the head office will not realize the profit in these transactions. So that's why it will result in unrealized profit on closing a good in transit, on good in transit, because so the unrealized profit, how do we know that profit is equivalent to selling price minus the cost price. So profit will be 28.96 minus 27.11. So our unrealized profit will be, so this is our unrealized profit on the goods in transit. So I think we have done with note number 1. So number 2, I've been told Mombasa branch had sent cash amounting to that to the head office on 30th June, and the cash was not received. That is the cash in transit. Number 3, annual stock take on that 1st March 2024 revealed the following: the toys which cost the head office 10,000 were considered obsolete. So we don't have the working for that. It will be just an expenditure like the others. And then packaging material at the head office, which cost 5,000, was spoiled. That one also will be an expenditure. The Mombasa branch stock tech revealed a stock shortage of 13,000, being the invoice price by the head office to the branch. So that is also the expenditure. Provision is to be made for a bonus to the Mombasa branch manager at 10% of the net profit after the bonus. Fixtures are to be depreciated at the rate of 20% per annum on a straight line basis. Depreciation, we don't have to have the working, just 20% of the cost we have been given there. So I think hii ndio ilikuwa tu a working hapo, but there's other workings which it will come later. So now I will be using my format here. So I will be using my format here, but you utaandika a new one. Now, sales. Sales, we have been told external only. So we have how much for the head office? Remember tumekata 3 zeros, eh? Yeah, so 2,800. So we tuko na 2,800, and then branch ni ngapi? 1,500. Combine the two. So combine this plus this, give us 43. Goods sent to branch. We have goods sent to branch. Goods sent to branch. Yes, goods sent to branch. You can see in the branch, tuko na 58, 1598, and then in the branch, 1569.0. What is the different? Why is it that we have some different? The other one is at an invoice price, and the other one is at a
cost.
At a cost. The one which is in the branch, it is at the cost, but in the head office, it is at an invoice price. So we will account here at an invoice price of 1598. We say it, we don't have it here. And also here. So combine the two here to give us 43. This one to combine that. So we get our total. Our total sales. I'll get the total sales. Okay, go to the opening stocks. Has anyone seen any place written the closing stocks? There is no closing stocks. So closing stock 0, 0, 0. Purchases. For the purchases.
Opening.
Ama umeona opening?
Sijui, hello, sijui kama screen yako una share ama ni mimi ndo sioni. Sioni kitu, iko tu black. Sijui kama mwenzangu anaona. Oh, I can see it now.
Umeiona?
Okay, mimi naona.
So I've said I'm not seeing the opening stocks. The purchases. Do we have the purchases? Yes. So we have been told the purchase of packaging material 440. So that is the purchase of packaging material, which you will include also. It will fall under the purchases. We also have the purchases of toys. So we can combine the two, 440 plus 4,000 to give us a total of how much? That one. Do we have the purchases for branch? Don't have the purchases for branch.
No.
The total still will be 14.4. The combined will be 1440. Goods received. Now, so the head office is 0 because it's the one sending. Now, good receive is the branch receiving. So we had goods sent to the branch, which is this one. But now here, we will record at the cost price. This is at an invoice price, but you will record here as the cost price. Cost price ni ngapi? Goods received. Goods received is the same as the goods sent to the branch, which is 1569.04. 1569.004. Now, we have the shortage, the spoil, and also the obsolete, which will affect our stocks. It will affect our cost of sales. So in that case, we'll have to adjust here. We'll have to subtract here. We credit the cost of sales and we debit our expense. We debit our P&L. So we'll have obsolete. I'll be right, obsolete. Obsolete. So obsolete, it will affect the head office only. So obsolete, we have 10,000. I write 10 because of other zeros. We have the spoil, but it is a less. So less this. Then we have the spoiled. Spoiled ngapi 5. It's also a negative. Shortage. Shortage is affecting only the branch. So 0. Shortage is 13. So for this one, the combine will remain the same. This combine will remain the same. Also combine here will remain the same. Now, how much will I record as the shortage in the combine for the branch or for this amount? Itaweka ngapi? So the first thing is that because this is the cost, so we'll have to do the combine at the cost price also, right? And remember, all these are at an invoice price or at a selling price.
Selling price.
At a selling price. So we need to get the cost so that we can combine here, because we cannot combine the cost and the selling price. So we go back to easy percentage. So you'll say that this is, you can call it number 2. That is a cost price of shortage or branch shortage. So to say, if 94% is equivalent to 13, what about 80? 88 ama iende hivyo? 88 multiplied by 13 divided by 4. So if 94%, the selling price to the branch, they are selling it at 94%, which is equivalent to 13. What about the cost, which is 88? So we'll get the cost